Hey guys, I want to just talk to you about what is this Game Stop, AMC, and all this craziness, and what the heck is a short squeeze? Well, it's not something you'd see in a hockey game or even a baseball game. What the short squeeze is a very weird concept of you selling something you don't own. Not something you're supposed to usually do, right? But with stocks, what you can do is you can sell something short, meaning you sell the stock, say, at $25 a share, and you think this stock's going to be like tanking, it sucks, it's going to just keep going down. And so what you do is you borrow money to sell the stock you don't own, which means now you have to pay that money back, but not in money, you have to pay it back in the shares of that stock. And then what happens is you hope to buy the stock at a cheap price. So if you say you sold it at 25 and that stock drops to 5, well, guess what? Now you just made $20 a share because you'd sold it already at 25. Now you're only paying $5 a share. So great deal. What's the problem? Well, if all of a sudden that stock starts going the other direction, it's not like you can just give the money back to who you borrowed the stock from to sell. No, you actually have to give them the actual shares of the stock back. And tons of mutual funds actually make money off of lending out the physical securities to doing this to these different companies. And so what happens is that happened with GameStop. And all of these people online on Reddit started talking this up and saying, hey, look how many people shorted this stock. Let's start buying the stock. Well, guess what happens? When those people, lots of times hedge funds that have borrowed money and do this on huge dollar volume, once they started buying the stock, it went beyond how much they sold it for originally. So now they're losing money. So guess what they have to do? They have to go buy the stock. Well, guess what? Other people who are also shorted the stock, they all have to go buy the stock. So now all of a sudden it looks like tons of people love this stock and the stock's going up in value, not because of intrinsic value to the company or anything else, but because they have to close out that stock by giving those shares that they borrowed back to that bank or whatever institution they did it with. And so that's what they call a short squeeze. So what happens is when people are losing money on these, they have to quickly sell that stock, which means they have to buy the stock, and that drives the stock up. And that's what's been happening. The other part that people don't really realize is this Robinhood app that people love to trade on now, where you can do all these free trades. TD Ameritrade, a bunch of these companies do this thing where they pay for the order flow. And this payment for order flow is how Robinhood makes its money. Well, the funny part about the number one person who buys the orders and exercises the orders for Robinhood is a company called Citadel. Guess what? They were investing in one of the hedge funds that was losing a bunch of money in GameStop. So they were literally playing both sides of the aisle. They're supposed to do what's in the client's best interest, but it's a little tough when you're playing all sides. And so that's one of the things that's happening. A lot of times people are thinking that this is the little guy taking it to the big guy and hurting Wall Street, but it's actually Wall Street's still making some money off of this deal. And on the AMC side, there's a hedge fund that just made a ton of money because they restructured their debt and they made it interchangeable for shares of AMC stock, and they just made a ton off of it. So what does this mean to you? Well, it really means nothing, because hopefully you're not playing along, because it's really musical chairs. Whoever keeps talking that stock up and is the last one to leave is going to lose everything, because that stock went up 1,800% in 2 weeks, is going to crash and crash and crash and crash like a rock. And so what should you do? Don't do it. Go buy a lottery ticket. It's probably almost safer. And that's not something I normally say, but yeah, it's really craziness. And so hopefully that helps you explain stuff. If you ever want to talk about your portfolio and your risk, there is a risk score you can take on wealthcreator.com. But thanks for listening. Talk to you soon.